Welcome back on to a CNBC TV18 special now. Business Optimism of India Inc. is at a 10-quarter low in the July to September quarter. That's as per the Dun & Bradstreet Business Optimism Index, which measures the pulse of the business community by surveying 400 companies across sectors to review their optimism across 6 key parameters. To discuss the findings of the survey conducted during the month of June, I have with me Manish Sinha, the Managing Director of Dun & Bradstreet. Manish, thanks very much for joining in. To begin with, help us understand what this means. Business confidence at 70, that is the index stands at 70 during Q3, and that is at a 10-quarter low. Simplify what that means and what are the key concerns which have led to this drop in optimism by the industry?
Right. So, Kritika, as you say, the Business Optimism Index is just an index. So, to understand it, you would compare it with the same number the previous quarter. From 70, it used to be 78 in the previous quarter. And actually, the same quarter the previous year was as high as 81. So, the important thing is the time series, and the fact is that it's been declining.
But what are the key issues that have hit business confidence? You've quoted slacking consumption, high unemployment rate, stress over NBFC, even global headwinds such as trade issues and tariff concerns. So what are the key concerns that have led to this significant decline in the optimism index?
Yeah, so essentially, Kritika, it's a combination of 6 groups of things that our respondents talk about. And unfortunately, 5 of the 6 groups are actually on a downward trend. So the optimism is declining when it comes to the amount of sales that they're going to do. It's declining in terms of the amount of profit that they think they're going to make. Similarly, down in terms of selling prices, order book, and employment that they plan to actually generate. The only place where it's actually not declining is in terms of inventory they expect to have, but even there, it's only flat. As regards, the package of industries that is captured within the index. It's 6 groups of manufacturing industries and 6 groups of service industries. So really, it is a picture of what the overall sector is telling us.
Let me get slightly into the micros then. The survey has revealed that optimism over new orders is at a 10-year low, selling price at a 17-year low, and new sales at a 2-year low. So is this largely at the back of low sentiment in consuming sectors like auto, FMCG? Auto specifically seems to be the best hit.
Yes, so those are, the kind of factors that you talked about is definitely some of the things that is leading to the decline. The other aspect of it is that the recent budget announcement has been actually signaling what the government wants to do. But if you had to just understand, the budget came out 43 days after the actual, the election date of, or the counting date of 23rd of May. So what we've seen is the signaling that the government is intending, but obviously it's short of specificity, as you'd expect. And that's one of the things that, the market is probably saying, I wish I knew more about what was coming.
Okay, but just to get specific, what are the sectors that are the worst hit? If you just broadly had to summarize, which are the sectors that are least confident and which are the ones that are still seeing some kind of silver lining?
Right. There's 3 sectors that we actually feel the optimism is the lowest.
Okay.
It's definitely low in consumer non-durables. And it's definitely low in the basic goods. When we say basic goods, we're actually talking about the end products that the customers buy. It's actually not so bad in capital goods, where the volume of sales and net profits actually has a positive movement in the index. It's also not that negative when it comes to construction, strangely enough. In the case of construction, we see a positive movement in terms of level of selling price that they expect to get and the level of stock, but a negative movement in terms of new orders that they've received. So some sectors quite negative, some sectors are a little bit positive.
Take us through the auto sector specifically. You know, the maximum amount of stress that we are seeing of domestic demand slump seems to be hitting the auto sector. So what are the key concerns that the auto sector seems to have over here?
Yeah, you know, the biggest thing about the auto sector is, right, it captures both urban and rural, Kritika.
Yeah.
So you've got passenger vehicles, but then you also have tractor sales. And the combination of urban and rural actually leads to knock-on effects in other sectors as well. And the other aspect of it is, it just so turns out that, you know, when it comes to the media and the way, it's very easy for almost every consumer to understand when media reports that car sales are down and you know, so-and-so company sales are down by this much %.
Yeah.
It's something that's much more relatable, and it has a significant knock-on effect in terms of optimism.
Okay, we are very tight on time, Manish. So very quick answer from you. As far as workforce addition is concerned, the majority of respondents, that's 56%, expect no change in number of employees, 40% expect increase, and the remaining are expecting an absolute flat. So net, which are the sectors that are actually hiring, and which are the ones, you know, new employees should stay away from?
Well, I'll tell you where the numbers are quite positive. It's actually very positive in the hospitality industry.
Okay.
So hotels, resorts, travel agencies, it's very positive. And secondarily, it's positive in consumer durable and in the retail segment.
Okay, but everything else is going to be slightly flattish. Manish, thank you so much for joining in and taking us through the fine print and the details of the Business Optimism Index. Business confidence at a 10-quarter low, and we just went through the details on why.